Hey everybody, this is Cody Kessler from Kessler Lending Advisors, Division of HomeBridge, coming to you on location today from Oyster Point Hotel in Redbank, New Jersey. I am super excited today because I got a really good friend of mine, Rick Floyd, who is the Executive Vice President of HomeBridge Financial Services. He's joining us on location today, so super happy to have him here. Just a quick reminder, we are live. So in today's topic, as we're talking about these things, we love feedback. Ask as many questions as you can. Today's topic, we're going to talk about the industry and the changes that the industry has made, governmental changes, and how they impact the buyers. So, with no further ado, Rick, thanks for joining me, man. Much appreciated.
Thank you.
Really excited about this. So let's just jump right in. So there have been some major changes that have happened in our industry. How long have you been in the industry?
Since 1989.
So you do the math on that one.
Yeah. Well, I was going to do the math quickly, but I decided I'd just give the year.
But so since then, have you seen any changes in your entire career that have been as substantial, so far-reaching into what we do, but also have had such a large impact to the client, the consumer, as you've seen over the last 12 to 24 months?
Not at all, Cody. The last changes that took place in October of 2015 with the TRID changes, obviously the biggest change in the mortgage industry in 30 years. And with those changes, although there have been some, great, rules inside of TRID that's helped protect you, the consumer, it's also from an industry standpoint been a massive change from standpoint. Our costs have gone up, somewhere close to $600.
Well, explain to everybody what that means, though. If the costs of what the mortgage company has to pay, how does that translate from Fannie Mae to the mortgage companies to the consumer?
Well, obviously, all lenders and everybody starts the day with the same dollar, right?
Yep.
And depending on what those costs rise to, adversely affects the company's profitability, which in turn affects the consumer. So therefore, that cost has to come from somewhere. So it's my personal belief that although the rules have protected the consumer, it's also cost the consumer more money today to do a mortgage transaction and to buy the American dream, to buy a home. It does cost the consumer more money today because of all the changes that have taken place over the last 6 months and 24 months.
Things like it costs the companies, mortgage companies, a ton of money to have a legal department that can stay compliant with all of the consistent changes so that the CFPB, and we'll talk a little bit about the CFPB, which is the Consumer Financial Protection Bureau. We'll talk about that, but those are the types of things. It's meant to explain to you that companies have to staff more people, more processors, more underwriters, more legal departments, more closers, and those are bottom line impacts, and they don't get absorbed by Fannie Mae or the government or the mortgage company. They get absorbed by the mortgage company, and then that obviously gets passed along to the consumer. So to Rick's point here, the federal government has come out and said, great things, that they're making all these changes and regulations to help you, the consumer, but you want to make sure that you understand that a lot of these regulations, they're a double-edged sword. They're helping to protect you, but they are raising your costs at the same time. So,
just for an example, real quick, on Code in the legal, 24 months ago, our legal staff inside HomeBridge had, 2 associates. Today, we've got 11. So you can just tell, and again,
attorneys don't get paid much.
Right? Yeah, but $10,
$15 an hour guys.
That gives confidence to you, the consumer, that an organization, like HomeBridge and Cody's, region here, is that we're doing the right things as an organization that we must do to make sure we stay compliant, as well as you as a consumer, that you're dealing with a reputable organization, that does follow the rules, and the rules are what they are. So you got to abide by them.
Absolutely. And a company, not to say that you need to go and search for companies that don't have CFPB complaints, but certainly it is something that you need to be aware of. If a company is not becoming compliant, if you go back 5 years ago, everybody was worried about banks going under because of financing, not being financially stable enough. Same kind of environment, but this has to be, this is more regulatory. The CFPB can put a mortgage company out, blink of the eye, snap of the finger, stroke of the pen, so to speak, with arbitrary fines and things like that. And a lot of consumers are aware of this and they're concerned about it. So let's kind of jump in a little bit more about the CFPB. What's your take on them? And I know you don't want to say too many negative things here, but
since we're live, we'll keep it.
Keep it clean.
As Cody mentioned a while ago, the CFPB, was established, when the real estate industry and the mortgage industry had its meltdown in, 09 and 010. And there was a lot of, lack of better words, bad mortgage companies and real estate, out there in the marketplace. So from that standpoint, they have helped garner that. But from a standpoint of just the increased cost, and the CFPB really doesn't answer to any arm of the government, right? So therefore, I don't want to say that they're just wielding their power, recklessly, but I will tell you, from a standpoint of, you have to really, as a company, spend more time and money and energy to make sure that, because you just don't ever know. We were fortunate enough to go through an 8-week CFPB audit, January and February of this year. Happy to say that HomeBridge, we had 0 fines. So you can
it's extremely rare.
By the way. That doesn't happen very often. So some people would say, well, maybe we're too conservative. But at the end of the day, we have over 1,500 associates, and we have to protect them and their families. And so we do take that very, very, very seriously.
Absolutely.
And as a consumer out there, I would challenge you. There's a CFPB website. You can go on there and you can do research on whatever lender that you potentially are looking to do business with, and I challenge all the consumers to do so and to do business with someone that doesn't have the CFPB complaints on their website.
Certainly, yeah, it's a great place to start if you're concerned about the integrity or the honesty of a company. You can go to the CFPB website, as Rick said, see what kind of complaints they have. The state is another good place to check. Because those two are different in the sense that one is federal government, the other is state level. You can always go, and we've mentioned this on a couple shows ago, you can check out any loan originator and find out through the NMLS where they're licensed at, complaints and such. So what do you see coming down the pike, in the future? Do you see things getting more difficult, or do you see things, easing up? Where's that pendulum swinging?
I think there's additional regulations that are coming out, whether it has to do with additional regulations from HUD, the FHA, V8 loans, relates to the credit reporting agencies. So there's still changes that are coming. It won't be nearly as massive as what we went through in October of 15, but we're not backing up where it's going to get easier. It'll continue to have changes and more regulations and more compliance coming down the road.
And what does that mean for you? So the more regulations that we have as a mortgage company by the federal government means that you have to give us more documents. The number one complaint that we hear from customers is that the enormous amount of documents that are now required for a mortgage company to review in order to approve and close a loan. So that's not going to change anytime soon, ladies and gentlemen. And in fact, what I would say is my number one tip that I want you to take away from today's show: be prepared. Okay? Understand that if you're talking to a loan officer and they're telling you how quickly or easily it is to get pre-approved, all they're doing is leaving all the hard work for later on, after you hear me talk about this all the time, after you have risk and exposure. So if everybody is playing by the same rules and on a level playing field, meaning that every mortgage company pretty much has to document the exact same thing with very little margin, of company A needing nothing and company B needing everything, that's just not there. So you need to know and understand that all documents are going to be required for all loans coming from every mortgage company, especially if it's coming from one of the GSEs or government-sponsored enterprises, which would be Fannie Mae, Freddie Mac, or Ginnie Mae for any government loans. I really do want to make sure that everybody understands that mortgage companies, while we have a bad reputation and a lot of times they're well-deserved, there are great companies, and they're great guys like Rick Floyd that run this company along with several others that work really, really hard to make sure that in an environment that is ever increasingly more difficult, that we're doing everything that we can so that you, the consumer, have the best possible experience that we can give you. So we appreciate you checking in with us today. That's all we have for today's KLA episode. Make sure that you follow us share us, like us on Facebook, and always, if you ever have any questions, always feel free to reach out to anybody here at HomeBridge. We're more than happy to reach out. So thanks so much for joining us on today's show.
Cody, thank you.
And hopefully we'll see you next week on KLA Now.